Well, it's official. I think the internet has lost its gosh darn mind. If you haven't been hiding your head in the ground, there are articles by the dozens slash hundreds and a lot of frantic chatter about AI, Chat GPT. AI is the best. It's going to change the world. I mean, look at this little cat on the screen. He can't get enough of AI. I mean, imagine this. Imagine a world where we get to read articles written by a robot. Oh, that is the greatest. But that aside, and maybe you like robot articles. Let me ask you this. Seriously now. You and I, we talk once a month, every month, sometimes more. Do you really think that you're going to be able to log in to Chat GPT or AI in general and say, give me a system that makes 10,000% in a year, and you're going to get something that works? Do you? That's where trading is going, right? You're going to be able to plug in, make me a system, dude. Dude being the robot, of course. You're going to be able to type in like this cat here, and you're going to be able to be a trillionaire. Do you think that's where we're headed? Well, instead, let me offer you this. Instead of desperately seeking AI articles or seeking and being distracted by the next big thing, what if we did something crazy instead? What if we spent our time looking for something that's robust? What's robust mean? It means it's going to last today, it's going to last tomorrow, it's going to last next year, it's going to last and last and last. It's the old Warren Buffett line. You know what the number one candy bar in the country is in the U.S.? It's Snickers. How do I know? Because it was number one last year, and the year before that, and the year before that, and the year before that. Stuff that lasts will make us rich. Not, hey, robot, build me a system. So, what is, AI aside, what is a way to trade that will last for years, plural, for decades? What can we reason it out? Can we figure out what might work indefinitely? And we're going to get into a bunch of numbers. As always, these are not from actual trade accounts. They're not risk money you cannot afford to lose. And these are for entertainment and for thought-provoking answers. Okay? Well, if you think about it, and if you haven't thought about it, well, you've come to the right video, right? Stop and reverse from a strictly common sense standpoint has to be the most robust way to trade. Okay? Let's make my case, or make its case, not my case. The origins go back about a century. Go back to Dow theory. Charles Dow, and that was what, the 1920s and beyond? He had a theory that if you break above a pivot high or break below a pivot low and you just ride it, okay, it goes up and then it breaks down and you go short, and then it breaks up and you go long. You just ride it up and down. The idea was you just ride the wave of the market. Predictions don't work. You don't need me to tell you that, right? I mean, there are articles about that. Just search that with your AI. Find articles. Find me an article where it doesn't work. Right? If you just ride the wave, not predict, not, oh, I'm in, I'm scared, I'm going to get out. Don't get out early. If you're just riding the wave, you don't get stuck in one direction. I only trade long, and then it goes short like it did in 2008, like it did in 2022, like it did many, 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 many other times. If you're just riding the wave, no predictions, no early exits, no wrong exits, quote unquote, you're not stuck. You're just going where the market wants to go. Right? How can that screw up? If we just stop and reverse our position when the conditions are no longer good, how can that ever treat us wrong? Or how can it not be best? Love double negatives. Say it again. If we're getting in at a great time and exiting when conditions are exactly opposite, how can we miss a big trend? Seriously, if we're stopping and reversing when conditions are the proper way each way, How can we miss a big trend? Seriously, you can't. Literally, you can't. If you're not limited, if you're truly riding the market, there is no way you'll miss a big trend in anything. We will always be in for the big long winners, and we'll always be in for the big short losers, even though it's not a loser. It's a winner because we're going short, but it's a loser if you're a buy and hold long. Get my joke? Not a very good one. Okay? How can that not be the best way to trade? You're always there for the big ones, long or short. Well, there's a problem, though. There's always a problem, and that is we're going to get destroyed when there aren't trends. If it's just going sideways and the situation says go long, but doesn't go long, doesn't go anywhere, and then a few days later or a few hours later, you get the short signal. You can see you're going back and forth, and you're not making any money. It's a loser every time if it's in a sideways channel. So that's why maybe you haven't heard of it. That's why maybe you haven't considered it. That's why maybe stop and reverse isn't on the tip of everyone's tongue, even though very smart people have done huge research projects, like Kevin Davey, for example, that have shown that by far stop and reverse is the most robust over a long term. It's not the most robust if we're looking at a week, but over years and years and years, stop and reverse, just blind stop and reverse beats everything, beats all indicators, beats everything. But it's going to lose when the trends aren't there. The question is the short-term losing worth long-term success? I want to say guaranteed, but you can't say that because nothing's guaranteed. But with a reasonable assumption that it will always work, or at least it will work far, far, far into the future, is it worth working far, far, far into the future for a little bit of losing in the short term? Dun, dun, dun. That's the question. All right, well, let's stop talking theory and let's talk about a free system. Yay. Here's a Forex system. We've talked about something similar before, but we're using stop and reverse this time, SNR, stop and reverse. This is pound yen, which is the most trending instrument in the Forex world. It's on a 1-hour chart, and it stops and reverses when it gets an opposite setup. Okay? Here's brief details. We're going to do them all in a second. When price closes above the Bollinger Band set to a large length to eliminate the noise and a huge standard deviation to eliminate the noise and to identify something that's extreme, so 100 length and 3 and -3 standard deviation, the short entry is the exact opposite. Right? There's nothing tricky about this. If it closes outside, you go long, and if it closes below, you go short. Let's look at a hypothetical performance report. From 2003 to 2023, that seems like a long time. And that's not a very good screen. I don't like it. That's a little bit blurry, but it's 109,000. The drawdown is 12,002. That seems to work out. That profit factor of 1.4 is excellent. I've seen 1.4 work in the real world. This is 1.78. So big surprise. Stop and reverse has a monstrous profit factor, especially for something that trades a 1-hour chart. It's got a drawdown that's extremely manageable, about 9 times smaller than our net profit. Our absolute drawdown, when it goes below our original hypothetical account size, very reasonable, especially if we use, say, I don't know, $20,000 account. It's got a lot of trades. Now, profitable trades down there, ooh, that's scary, but as you'll see, that's not scary because this one actually has a break even. Oh, here it is. Okay, 1 hour. You saw the 103. The long target is 1,275 pips. In essence, there is no target. If it goes 1,275 pips, okay, let's take it out. That's ridiculous, right? That's a move to end all moves. And short target, if it goes 1,000 pips, go ahead and get out. Fine. Big stop loss because we don't want to stop out. We want to ride the wave, so it's a big stop loss. But we are going to move to break even. We're not going to just be totally riding the wave, and maybe that's a problem. Maybe you don't like that. Well, then take it out. There is a time exit because it's a 1-hour chart and things changed. So I left it on there for 130 bars, 1-hour bars, and 300 for short. Oh, you don't think that's riding the wave? Go ahead and take those out. I'm just giving you something to build on and something that actually looks quite good for free. Here is a trade example. Bollinger Bands, middle of the bar, upper band. Closes below, we go short. we'll make a lot of money, and then it starts to reverse. It doesn't hit our target, and it closes above, and that's a stop and reverse. That's a winning trade, and we stopped and reversed to go up, but it didn't. Wasn't ready to go up. It went down. So darn it, stop and reverse screwed it up, didn't it? Well, that's the price you pay if the trend doesn't go perfectly, right? Then we stopped out and we entered a short trade, and that ended up being one of those break evens. So that's what it looks like. You just put a Bollinger Band on your chart. You got a 1 hour time frame. Pretty easy. You don't really even need a robot to do that. So we've seen a really, really substantially, even though it's hypothetical, it looks good. Performance report. We've got reasonable rules. We've got stop and reverse methodology that seems to last forever. How can it not at least give us a chance to ride trends for a long, long, long time? We've got trades that we understand. Well, here's the dilemma. It's really the point of this video, except maybe calm down about AI. Here's the dilemma. If we're riding the wave, guess what guarantees? You want a guarantee? Here's a guarantee. It's going to lose. It's going to have losing years. Did great in 2022, by the way, the bear market. Didn't love 2006 at all. Why? 2006 was a lousy Forex year. Is 2006 relevant to 2023? Some would say no. I'm just putting it up there because it's as much data as I can find. So far it is losing, but we're only about a month in 2023. Losing. Nice winning years. Very nice winning years. Right? It does ride the wave. But honestly, think about it. That's exactly what it should look like, right? Don't switch that screen. Someone just got fired. This is exactly what it should be, because it's the losing that guarantees it's riding the waves, right? It's the losing that makes sure that it's going to be there when it's time to win again. Seems backwards, and that's the dilemma of this video. This is the terrible catch of stop and reverse. The system that will last the longest, the one that will work far into the future, is the one that loses more than we can probably handle. Who can make it through that or that, especially that or that? Oh, that's 2023. Probably we can make it, but loser. The one that lasts the longest loses more than we can handle. Man, that's tough, right? We have the answer. I'll give you the answer. The answer is trade a stop and reverse system or something that's close to it. Something that rides the wave. But it's going to lose. Now, if you don't like those metrics, we could just throw it out. It's probably why you don't hear a lot of frantic chatter about stop and reverse systems, right? Because it does lose sometimes. So we could just throw it out. We can optimize, right? Once we don't stop and reverse, though, you see what we've done? We're guessing, we're predicting. It's going to run this far. It's going to run 200 pips. It's going to run $10, whatever your instrument is. And as long as we're optimizing, you can hear what the experts will tell you. You're bringing failure and danger of curve fitting into the equation as soon as we stop doing stop and reverse. But instead of having a discussion going back and forth, right? It's good to do some thinking, but then it's actually good to see the data. That is why on my website I'm trying to monthly track as many different things as possible. There are tons of things on my performance page for free. It's not a paid site, obviously. I do a lot of stuff for free, but that's what I want to track. Should we really be afraid of over-optimizing? Is stop and reverse really the most robust? Well, how do we know? Well, if optimizing lasts longer than stop and reverse, then we can love the concept, but we don't have to do it. This is what I'm trying to do with these videos, and this is what I'm trying to do on my website. I'm trying to track what works long term. I want it to make sense, but I want the data to back it up. Well, Michael Scott agrees with me, so lucky me. Speed round is, if you want more of this stuff, just go to my YouTube channel. I've got tons of free systems that I track on my site. I do offer a new robot that's so simple. I wanted to make a robot that's so simple even I could do it, and that's the Keep It Simple Sherlock robot. Some people have shown some interest in that, and that's there. ScottWelshStrategies.com. Go to the performance page right there. Click, click. It won't click because it's an image, but that's where you go where I track all these robots. You can see it's stuff that's kind of what it looks like, even though I've done some updates there. And there's my last book if you want to read about a cool trading story and get more trading systems. All right, that's the video. I'll be back next time with more. Bye for now.